Paula, you can start.
Thank you. So welcome everyone to panel 2 again. This is financing energy efficiency in the public sector. My name is Paula Mendes. I'm from the European Investment Bank, and I'm here as part of the ELENA team. The ELENA is a facility that is run by the European Investment Bank on behalf of the European Commission. And it focuses on supporting private and public entities to implement energy efficiency, sustainable transport, and renewable energy projects. So today we have a presentation titled Investment to Increase Energy Efficiency in State-Owned Buildings. This presentation will be done by Christoph Blaschke. Before I introduce Christoph, I would like to remind you that this is a presentation of 30 minutes. After that presentation, we will have 15 minutes for questions and answers. Please send your questions as soon as possible via the chat, so we can have them in advance. I would also like the speaker, I would also like to remind you that I will have these 2 cards for you to keep the time. So 5 minutes when you have 5 minutes left, and this one when you have 1 minute left to end the presentation. And now I will introduce Christoph Blaschke again. He is the Energy Efficiency Manager at B.E.M, Berliner Energiemanagement in Berlin. He holds a Master in Engineer and Business Administration with specialization in Energy and Resource Management from the Technical University of Berlin. And before joining B.E.M, he developed and supervised climate action programs and projects in different energy and climate governance entities, such as the Berlin Energy Agency, the German Development Corporation, and the Federal Ministry for the Environment, Nature Conservation, Building, and Nuclear Safety. So having said that, I give you the floor, Christoph. You have 30 minutes.
Yes, thank you very much. So good morning, ladies and gentlemen from Berlin. I will just present you something about our program, our investment program, which has been supported by the ELENA facility, which is still in action. So we will finish next year, in the beginning of next year. And yes, I will just give you some insights. So what is the Berliner Immobilienmanagement GmbA Limited? Is it? It's the owner representative of the real estate assets of the Berlin Senate, of the Berlin government. So Berlin is a city state. So there are a lot of public buildings which belongs to the Senate, so to the city state. And it's a very heterogeneous building portfolio. We have around 5 million square meter gross floor area, and this the most important portfolio, the SEILB, special property of the state of Berlin, comprises 380 building complexes, and yes, the B.E.M is the unit, the investment unit for energy efficiency and measures, and we are developing these measures, and we have like a scope to develop measures with a payback around under 10 years payback period for our own funds and a maximum CO2 savings. So I will give you an overview of our scope areas, what building equipment areas we analyze and we improve. We have yes, the heating system as a very important yes, CO2 producing systems, then artificial lighting, cooling and ventilation systems. Then we also invest in smart monitoring and control technologies, in high efficiency cogeneration, and photovoltaics and storage technologies. This is our area of intervention, And now I will just show you the lines of investment, of our investment activities. We have, for example, the so-called heat package on a large number of buildings. It's a combination of heating control optimization, hydraulic balancing, and pump optimization. Then we have some interventions on individual room temperature control. Then another action line is the so-called intracting projects with the general contractor model. We have this is for bigger premises, for bigger properties, where we have energy costs about 100,000 euro a year, and there the strategy is to have a holistic and cross-discipline implementation on the specific property. Then we develop CHP plans. We roll out plans of this type until now. Then we have a lot of PV plants and storage, and yes, now we are also developing storage integration. Another investment line is the conversion to LED. This is the biggest like current investment activity, because it's approximately in all building sectors we can and we will change to LED lighting. Then digitalization is another line, and a few other specific interventions like energy communities. So on the next slide, I will show you an example for this type of intracting program. That this is the key project data from a school, Berlin Secondary School. Our unit has manages the upper secondary schools in Berlin, which are state-owned. There are also schools in different parts of Berlin which are not part of this of our which are not managed by our company. But these are rather big buildings, premises with 7 buildings in this case. We have photovoltaic integration, and we have an energy cost baseline about 300,000 euro, and we are in the payback period I described with all these measures, and we have considerable savement of CO2 emissions in about 42% in this case. So the idea of this intracting model is to have a concept-based contract award. We have like a general contractor model. We are using internal funds, an internal energy efficiency fund, and a revolving fund. So the general contractor does not finance these interventions, but he proposes a solution, an optimized solution, an interplay of different measures. So we have here at least 8 different combined measures which are complementary, like starting from heating technology. The CHP plant is integrated now. Then we have other optimizations of the hydraulic system. The ventilation technology is modernized. Artificial lighting is changed to LED. We have also interventions on measurement and control equipment. The central refrigeration system is also modernized, and we have a controlling and monitoring system, a web-based system. And last but not least, there's also the integration in the concept of the user. I will show you on the next slide another feature of this approach. In this case, we have in these bigger buildings, we have a performance incentive agreement. That means that even if we finance by our own funds, there is like a sharing agreement with the general contractor. It's as simple as it's an energy performance related payment, and we can see that there is an investment share of 80% of the total investment and the performance share of 20%. And independence of the success of the measures, the payment can be adequate. So in the table on the right side, you see that if it's the performance under 70% of the savings target, there is no compensation. The 20% performance share is not paid. And but when we are at 150 or 140% of the initial target, then there will be like a participation at the performance share, and it can pay until 150% of the performance share. So this is another feature of this approach, of this financing, or this like project development approach. So in the next slide, I will show another approach. So there are different like investment approaches. We have seen the approach for the bigger properties with a large energy cost baseline, and the second line of interventions are so-called technology rollouts. In this case, we cluster different medium-sized, small and medium-sized properties together, and this is the standard solutions for energy bases below 100,000 euros. And an example is the heating system optimization in cultural policy. Police is for police properties. Then there is interventions in schools. Then we have the large conversion to LED program in all property segments. We have now started with the smart heat pump program for selected properties, and with real-time energy management system in all property segments. As a part of the selection, we have to take account also to organizational requirements. This is important in public buildings that we have seen. There are in many cases we have to take account of security requirements when we make interventions in police properties or in fire stations. So all these like organizational requirements have to be taken into account also in the clustering process. So not everything fits in all type of buildings. And I will show you now some experience with our fund financing mechanism. So we have different like funding pillars, and what is interesting with the technology rollouts, that if we just focus on one specific technology, there are in many cases also technology specific finance available. So for the investment part, there are a lot of programs on different levels, government levels, which can be combined in this case. So this is an advantage of a technology specific investment. Then in any case, the dedicated internal fund is always our first financing pillar, and it's organized like a pre-agreed financing. So if we adhere with our projects in a refinancing horizon of usually 10 years, then we have like a pre-agreed financing and can just do it. So we don't have to develop the measure and then try to find our funds, but we are more flexible with this fund. Then these own resources can in many cases supplemented with these investment grants. It's not always possible because we have clustered projects, and not always this is applicable. This is our second funding pillar, and the third funding pillar is the lease models we integrate. Then we can use, we have partners from the also from the public sector. There's a public utility in Berlin which installs and leases to us as building managers the photovoltaic plants and the CHP modules. And so this is a third funding pillar. And we combine these three types of investment for our investment measures. So then on the next slide, I will just give you some lessons learned for this program, for our for the project implementation. The first point, which is important, that this ELENA co-financing for the project development phase it complements very well with our flexible investment financing strategy. So, because without this project development phase, which is which is like temporary before the investment, it couldn't work so well. So this is a first point. And then a second point we learned is that in the case of a large number of existing buildings, the heterogeneity and all the history of the building and the organizational structures, the people who use these structures, has to be analyzed, has to be taken into account, and that's why the initial building analysis and the project structure is so important. So that's why also these initial project development funds are important, and this is something we learned from the implementation, because there are, for example, some things which has to be analyzed before, because otherwise it cannot be rolled out, this measure. A third point is that the first technological progress is important to take into account. That, for example, we until now we also invested in CHP, in high efficiency CHP plants, but this looking into the future and the technological progress we see, then this will not be continued. So because we have to take into account the new possibilities with building integrated photovoltaics near on parking lots of the buildings, and using the real-time control which is possible now, we can tap new potentials we hadn't at the beginning on the textbook, in the plan. So it's important to take into account the technological progress in a investment program which is about in over 3 years. So there can be changes, and it has to be avoided to have lock-in effects to invest in technologies which we can see in a couple in 10 years will not be CO2 effective. That's the third point. The fourth point, it's again a little bit the second, that we have to invest at the beginning in to match the technological starting point and the organizational boundary conditions with the technology we roll out, because we had a couple of delays and obstacles just because something was not what on the plan, the security requirements, something like this. Then in sometimes we had like if we, for example, put a weather forecast dependent control system, this was in the heat package, and it came out that some a number of heating systems, a number of buildings were not working at all. So the control mechanism, the control system was not updated, and for years it has been put on manual operations. So this measure couldn't be without delays implemented. So this was an lesson learned, that this technological starting point, the initial analysis, is very important for rollout projects. Otherwise, the serialization of the measure, the cost reduction, can be eaten up. So in rollout projects, we are now putting ahead with digitalization and real-time control. We take this more in account, and we put a stronger focus on the initial analysis of the specific buildings. So, and on the last slide, I will just give again a conclusion on regarding the efficiency finance, because it's an investment forum here. This shared savings is good for complex projects. It has the performance share motivates the contractor to put his effort, his know-how into the optimization, also post commissioning. Then the supply of capital. The second point is that our ready-to-call financing of our internal fund reduces our financial costs, and accelerates implementation time. The size and duration of contracts using an internal fund is more flexible. We can just have more flexible financing options and use them, and complement our internal funds with new financing possibilities coming up. So there are now also with Green Deal and the government is putting ahead new funds. So this is very good, that our internal fund can be complemented. We can react on these new developments. So it is we can combine it with we can decide also in course of the development. We can say this measure can be financed by an equipment lease, so we can also react on this side. Yes, another conclusion: the multi-stage financing with the preparatory ELENA project development funding was ideal for us. So we are more flexible with this multi-stage approach. And yes, we have again that what I explained before, that we have two strategies: scaling up for the big properties where there is like an optimization on the whole property level. This can be very effective. And on the other side, we have the numbering up for specific technologies. We can roll out in a lot of properties. So both models are successful and work good, but they are dependent on the size of the properties. And for the numbering up, we have to analyze in any case very good the initial situation in the buildings. The last point I want to highlight is the tenant landlord model. This is a specific model we use in Berlin, so that's why also the B.E.M or our company exists. So every, like to explain, the police or the fire department or the school, they at the end they rent their buildings, but the buildings are always like managed by our company. So there is like a concentration of the know-how of the asset management. So and that's also the reason why we can use this internal fund model, because we just can pool all these the money we save from our measures can reinvest it again on, and it has not always to be the same property where we reinvest. So it's a very good model for this type of interventions. Yeah, that's for short, I think, all points I wanted to highlight, and I'm open to questions now.
Sorry, I have an issue. I'll be back for 1 second.
Yes, okay.
Sorry about that, but I'm back, and thank you very much for your presentation. I do have one question already here in the chat, but before going and answer this question, I do have actually another one, that if you could maybe explain us a little bit, or yes, say a few words about the average investment level that you are seeing in your projects, and the average level of savings as well. I think it would be interesting to understand more or less in which volumes are you, so what kind of volumes are we talking about here in your projects. And then the following question would be from Daniela Bachner, who is asking about more information on the structure of this internal fund. So the budget, the source of the budget, and how it is refilled, when was it established, etc.
Yes, okay. The volumes, it differs a little bit for their very big projects, like which arrive at couple 4 million euro also, but it's an exception. So normally we have like around 1 million investment for the bigger projects. For example, now in the school I showed, these are because we the payback period of 10 years is at the end is the limit for the investment. Also, if we have a 100,000 euro yearly energy cost, and we multiply it with 10, then we had 1 million. So if we are 300,000, we had 3 million investment. So a little bit in this case. So it can also be 3 million, but it depends a little bit on the building, on the property we invest in, and what is the starting point, because some buildings are better than the others are also, parts are already optimized, some have already the LED change and other measures. So it's a rather flexible, and on the smaller and medium premises is the same thing. So we try to cluster that it is important for, also interesting for contractors now to invest and to give their to make an offer. So I can just, for the projects I am managing now, we try to not to be under 500,000 euro investment for a single tender.
Great. And regarding the savings, so the energy savings that you are more or less expecting in each of the programs or projects you're managing, or in average?
Yeah, the savings depend also are very technology specific, because if we have LED lighting, it's rather high from the baseline, because it's very clear that for the same kilowatt hour, we can have much more lighting. So there we have, yeah, 30-40% savings only for this measure, but only for the part which is used for lighting. So 50%, I think. But on other measures, it might also be that there's only a 5% savings, but also the cost of the measure is is in a way that in 10 years we can have it back. So it really is very different, and then it's also like a bit complicated, this for example for the heat pump technology, because we have on the one side we have the total kilowatt hours used for heating will decrease, but the energy we use for the heat pump, the electricity in Germany, is much higher taxed than fossil gas now. It should change in the next decade, but and that's also a point we have to take into account, that like in a new heat pump system will have a lifetime of 18 years, and in 10 years there should be another electricity mix, and much cleaner electricity mix. So this savings it's not very easy to make to see exactly how this will play out with the prices of gas and electric power and CO2 taxes. In any case, in this case, we have to take something for we think this is the most probable development of in this type of. So it's one is the savings of kilowatt hours, the other is the savings of CO2. So it's an open discussion. And yes,
going back to the question regarding the internal fund.
Yes.
Provide us more detail on how it is structured.
Yes. It changed a little bit at the beginning. It has we had a starting point. It had there had been a property sale of a big property, about 10 million euro, which has been put into this fund. So it was very simple. The money from this sale of this premise has not been put into the normal like budget, but it has been retained in this internal fund, and then there has been also like this has been increased every year now with another agreement that from the like building budget. So there's a very big budget for modernization, not only energetic, but there are a lot of old buildings which has not been renovated for a long time because there were constraints on the public budgets, and so there is a lot of like building activity which has to be done, and there's a big like budget for the next decade. And so from this big budget there has been like an agreement that every year 10 million euros of this fund will be reserved for this type of fast track interventions, because the very big intervention is very often like the facade or structural buildings renovation, and this is very like there is no payback because it's so costly. But for our interventions, we can with a smaller budget we can just faster go ahead and put into action all these measures. So this is the idea. So so what I wanted to say that it has been modified now a little bit. So before the idea was to couple it on every premise, on every building, that there is be like a mechanism that every building pays back the cost of this investment for this building. but this has yeah, it was too complicated, so we lost too much effort and too much time for all these calculations, which doesn't make sense when we go ahead. We want to go ahead fast, and we see in the general effect of our measures will take this. Yeah, we see we can measure these savings on the whole segments of different segments on the whole program, on the whole building portfolios, and that's yeah, that's a new like implementation, is that we don't just give every building has to then pay back the investments which have been there on this building. Also because this is not very often not the responsible of the user or the type of building, because it's historical reasons that one building performs very good, another not that good. Then and now we have the problem with Corona, that the school buildings have to be yeah, the windows have to be open for aeration. So there are a lot of for this special situation we have special conditions, and then in this year, or there will be no savings in this school buildings, and to not to spend time on all these yeah, things. We just decided to change this, and I think it's a good way to do it.
Okay, thank you. I don't know if there are other questions from the audience, but in the meantime, I just would like to ask you to put this in perspective. So you just mentioned that the fund started with 10 million euros, right? But you know, how many buildings are being managed by your entity? So you know, how many people are working into this energy efficiency project? So to have an idea of, you know, to have an idea of where are we in terms of scale.
Yes, we are now about 15 people, 15 engineers, more or less. So it changed always. Some people always change. Some engineers leave. But now the perspective is now to increase to 18 persons, full-time equivalents, the whole unit. And this is the energy team unit then for all these buildings of SILP, these properties, and 5,000, yeah, 5 million square meters, and all these 380 building complexes.
Okay, I see. Perfect. Thank you.
So there's a lot of work. So
yes.
So to take it into perspective,
Yes.
we are all working more than 100%. So there's a lot of work. So there could be also more people working on it. But that's the frame.
Yeah, no, perfect. Thank you. Thank you very much. I would like to see if anybody else has a question. We are getting to the end, but we still have some minutes left. I don't know if there is anyone there, but otherwise I do have kind of a final question for you, Christoph, is that you mentioned this 3 pillars of financing, which are all this, you described them briefly, actually, you know, the first one being the fund, the second one being the external financing, right, grants and others, I guess. And then you also mentioned lease as one option. Could you maybe describe a little bit, you know, what's included in lease and how do you manage it? You know, how much actually do you go into lease, onto the lease option in order to finance these projects?
Yes, currently it's like we're using the lease option now for the energy generation. No, so because it's a typical, like, it's coming from the photovoltaic and the CHP sectors. So that's in now the way we use it, and how it is traditionally used in in the energy sector. But I can, yeah, it's clear that we can, with this model, we can also just accelerate the program, because we have a larger team now then, because the PV team of the public utility, they are also not much more people than we are, but we are then yeah, it doubles the team at the end, no? Because they are doing also projects for other entities in the city, for the because in Berlin there are every part of the city has like a small town, and they have the administration, and so they are working also for these in putting PV plants there on schools and other schools which are not in our portfolio. So this is, I think, an important optimization, no? Because they can yeah, they make more projects, they have a more streamlined procurement process for the components, and I think it's a good complementary action, and to go ahead. And I think the lease model is yeah, very good for it, because at the end we have very clear yeah, the agreement is very clear. Well, the cost is in the contract, the monthly rate we pay for it to use the plant, and so and on their side they can yeah, make like a balancing of risks. So not every project for them is profitable, I think, but in the average, with the price we pay for them, then in the average for them it's economic, and so I think it's in both interests to use these models where they have where there is like an entity which has the experience, no? Because on other fields it might be that they don't have the experience, and then it makes no sense.
Perfect. Thank you very much. And thank you very much for the presentation. I would like now to close this session by reminding everyone that at 2 p.m., so now we have a break, and at 2 p.m. The event continues with the closing remarks. So please join us at 2 p.m. again. But thank you very much for being here. Thank you very much, Christoph, again. And please remember that everything is being recorded and will be available in the conference website shortly in case you missed something. Otherwise, see you later then.
Thank you. Thank you for having me. Thank you.
Bye.
Bye.